There's so much information out there on whether or not to rent or buy a home. And if we're being honest, most of that information does not make the choice between renting and buying an easier one to make. In fact, in most cases, it just makes it significantly more complicated than one could ever have thought possible. But the truth is, it doesn't need to be that complicated. In fact, there's really only 3 things you need to know about the whole renting versus buying debate in order to make the decision for yourself. And in this video, I'm going to give you those 3 things so that coming out of this, you will know exactly whether or not you should be renting or purchasing a home. It really is that simple. But before we get into it, my name is Nolan Matthias, and if you want to thrive financially, this is the place for you. So do me a favor, hit the subscribe button and hit the like button so more people like you can see this video. Okay, so let's get into it. Let's discuss whether or not you should be renting or buying, because I understand, I get it. If you're watching this video, you have been faced with this decision of whether or not you should rent or buy, and you've probably watched a whole bunch of videos already that have complicated the subject and made it a really hard decision. And the reality is this shouldn't be a hard decision. It should be super easy. This should be something that people should be able to assess pretty quickly. And there's really only 3 things you need to know about making this decision. They are what the long-term outcome, statistically speaking, of owning versus renting is, how to make the decision based on your time horizon, and the actual math on how to determine whether or not it is better to rent or buy in your market at any given moment. Those are the only 3 things that you need to know. So by the time we're done this video, you're going to know those 3 things, and you're going to know pretty much instantly whether or not you should be renting or buying a home. So let's start first with what the data tells us about the long-term effects of owning a home versus renting. And the numbers here are staggering, because it turns out that over the long run, people who own a home have a significantly higher net worth than those who don't. And it doesn't matter how you run the numbers here. It doesn't matter what opportunity cost you look at. The reality is anybody who runs those calculations and based on a whole bunch of hypotheticals gives you a number that says you should rent or buy is dismissing the single most important thing when it comes to running those calculations. And that is human psychology. It is the fact that over the long term, people have a tendency to do the same things as people before them, and that people's financial habits tend to not deviate much from the mean. And when you start to look at the net worth differences of owners versus renters, this becomes very clear, because over the long term, homeowners on average have a net worth over $250,000, while renters' net worths typically tend to be around $6,000. And the reason for this is simple. When somebody makes the decision to own a home, they make a decision to take out a mortgage, purchase a property, and own it for a long-term time horizon. They will make their mortgage payments consistently, and those mortgage payments act as a forced savings account. Because the number one non-negotiable for people's finances is keeping a roof over their head, this is the one place that money goes to every single month, regardless of who you are. So if you know that your money is absolutely going to be spent on housing, it makes sense to own a home, pay down the mortgage, and use it as a forced savings account. Because regardless of what you do with the rest of your money, if your money is automatically being sent to that mortgage payment and paying down the mortgage and creating equity, you're almost guaranteed over 25 years to have a higher net worth. Because all the math about taking your down payment money and investing it and being better off is pretty much irrelevant when you consider that over the course of a 25-year period, if you have a bunch of money sitting in an investment account, human nature dictates that at some point you're probably going to make a mistake. But owning a home and making your mortgage payments on a consistent basis pretty much eliminates the ability to make a mistake, because a home is an asset that is not liquid, which means it's hard to sell and it's hard to make a mistake financially. You just keep paying, and that's why, statistically speaking, you will have a significantly higher net worth if you're a homeowner. And there's no bias here. This is just the data. Over the long term, this is what we know happens. So if you know that statistically speaking, your net worth could be $250,000 or $6,000, which one would you choose? The answer is obvious, right? You're going to choose to be a homeowner, or maybe you lie about other stuff too. Now, the second thing that you need to understand about the rent versus buy debate is time horizons. Over the last 20 years, people have started looking at homes as if they're stocks, basically looking at them over a 1 to 2 year time horizon rather than a 10 to 20 year time horizon like they should be. This is the single biggest mistake that people make when they're making their home buying decision. They're trying to figure out what the market's going to look like 1 or 2 years down the road, when if they looked at it 10 or 20 years down the road, what they would see is that the market 1 or 2 years down the road really doesn't matter. Any ups or downs in the market over a short time horizon end up being just a blip on the radar over the long run. So the way in which people should be making their purchasing decisions is not based on what they think is going to happen in the market. You can't time the market. Nobody can. You might get lucky, but you probably won't. The way that you should be choosing whether or not to buy a home is whether or not you can reasonably afford it, and reasonably afford it for the long term. So what this means is that you're buying a home that from a monthly cost perspective is well within reach, probably under 30% of your income, and you've also got a backup plan in case something goes wrong, like a job loss. And what that means is that in addition to a down payment, you also have 6 to 12 months worth of expenses saved so that if you end up in a situation where you do lose a job or you get injured or you get ill and you cannot work, you have the money set aside so that you can continue to make your mortgage payments. And I cannot emphasize this enough, you need to make sure that you don't just spend all your money on the down payment and then have zero cash left over. And the third thing that you need to understand about renting versus buying is the actual math to determine whether or not it's the right time to buy in your market. And this is really simple math to do. In fact, it's the exact same math that investors use in order to determine whether or not they should be buying a property as an investment in a market. And the way they do that is simple. They run the numbers to see if, with a 20% down payment, the cost to own that home is less than what they could rent it for. So what they do is they look at the mortgage costs combined with the taxes, combined with an allowance for vacancies and maintenance, maybe 5 to 10%. And if that number is less than what the properties are renting for, they go ahead and buy it because they know that they can make money on the property. And when you're looking to rent or buy a property, you can do the exact same numbers. Now, you may not have 20% to put down, but you still want to run the numbers based on the 20% down payment because those numbers will tell you whether or not the market has some rebalancing to do. So let me explain how this works. When a cost to own a home is less than the rents, what that means is one of two things. Either the rents will start to come down as people leave the rental market and enter the home ownership market, or home values will come up in order to match where rents are. Either way, what that means is that houses relative to renting are cheap. And make sure when you're running the numbers on this, using whatever mortgage calculator you choose, that you are using apples to apples properties. So if you're looking to buy a 2-bedroom property, make sure you're running the numbers against a 2-bedroom rental. Now, let's say the rents are significantly cheaper than what the home ownership cost would be. Well, this is an indicator that it may not be the right time to buy in your market. The reason why is either you're getting a really good deal on rents and therefore you should be taking the money, putting it aside until such time as the costs are equal, or what it could be an indicator of is that home values have some room to fall. And if that's the case, and if you're able to wait it out until the home ownership costs and the rents balance out, well, then you'll probably get a pretty good deal on a home. But regardless, understanding that when rents exceed home ownership costs or are equal, it is the right time to buy. And when rents are way less than the home ownership costs, it's the right time to rent, gives you the data to understand where your market is at. And when the market is balanced and you're buying with a 10 to 20 year time horizon, you know with certainty that you are purchasing a property that over time will give you the opportunity to build a significantly higher net worth. Oh, and by the way, if your rent and your home ownership costs are pretty much the same and you're purchasing well within your means, then you can take some additional money, invest it in the stock market, and grow your assets outside of real estate at the same time. Then you've got a double whammy and you're almost guaranteed to succeed financially. Oh, and if you want to see another video on what they don't tell you about renting versus buying, make sure you check out this video right here.